Okay, welcome to video 6. We've completed our worksheet and we've used the worksheet to make our adjusting entries. We posted to the general ledger. We prepared our adjusted trial balance and we have prepared the financial statements. So now it's time to close out our book. So step 6, we're going to journalize the closing journal entry. And the purpose of the closing entries is to get us prepared for the next accounting period. So these are journal entries, so we'll click on the journal entries tab and scroll down to where it says journal page 2. Okay, so now I need to look at my accounts and see which ones I need to close. So we can look at our general ledger because this has all of our accounts. Or I could look at my trial balance, which has the same accounts and the same account balances. So I'm just going to copy this over there so I don't have to keep going back and forth. And I'm going to put it on my journal page so I will have it. Okay, so I only want to close the temporary accounts. So the temporary accounts are withdrawals, revenues, and expenses. So the first step into posting closing entries or journalizing closing entries is to close my revenue and expenses into capital. So if I want to close my revenue account, it has a credit balance, so to close it, I will debit it for the amount of $7,600. Next, I need to close my expenses, and if I want to close them and they have a debit balance, then I will need to credit it. So I have depreciation expense of $83, so I need to credit it for $83, and salary expense of $2,300, and rent expense of $400, and then finally supplies expense of $1,600. Okay, so the net of all these will be closed to capital. So if I say $7,600 minus your expenses, so I would close the $3,217 to capital. So it will be a credit to capital because I closed net income to capital. And net income should increase capital. If it was a net loss, then it would decrease capital, so I would need to debit capital. Okay, the next step is to close drawing to capital, and drawing has a debit balance, so I would need to credit drawing for $2,000, and I'm closing it to capital, so I will debit capital for $2,000. Let me indent that credit. And that is how you close, and we'll put a date here, 9/30/2018, so that we know this is done at the end of the period to get ready for the next accounting period. And one thing to notice, when I close drawing makes the capital account go down. That's why we debited capital. When I closed revenue minus expenses, which is net income made my capital increase. If I had a net loss, it would make my capital decrease.